What up, traders? And in this video, today's topic is how to read a candlestick chart for absolute beginners. If you've never read a candlestick chart or you don't know what a candle is or how candles work, well, hopefully this video can give you some clarity and make it super easy and super simple for you to understand and, improve your trading day by day. So the first thing you guys are going to want to know is the anatomy of a candlestick. And what is a candlestick? A candlestick is the main tool we use, just like these, to read price action, and it tells a story about where the price wants to go and how it's reacting at different levels and why. So whenever you look at a candle, you're gonna have three or four main parts, excuse me. You're gonna have the open, which is the price that it opens at. You're gonna have the close, it's the price it closed at. And then you're gonna have the high, the highest price it got to, and then the low, the lowest part it got to. So whenever we look at a green candlestick, you got the open, close, high, and low. And then for a red candlestick, it's kind of similar, but opposite at the same time. So it's the same thing as for the high and for the low, but with a red candlestick, because it's going down, obviously, going down, we got the open, the close, and then the highs and the lows. Super simple. But whenever we read a candlestick chart, obviously the candles aren't going to look as perfect as these. So we have different types of candles, and each different type of candle will tell you like a different story. If a candle has like a super, let's take for example the green candlestick. If the green candlestick has a super like short wick like this, then we know that this is a little bit of rejection, and this, they didn't fight very hard to send it back down. Like, this is a super strong candlestick. You can think about candles as like a game of tug of war between buyers and sellers. It's like a game of who's stronger and who can make the price go in which direction that they want more, based on like the volume or however many people are actually buying and selling in that certain time frame on that candle. So if the candle has a super short wick or maybe even no wick at all, we know this is a super strong green candle. There was no fight at the top. Like it just went straight up and it had no fight, like no wick. But if we look at the red candlestick, let's say the same thing because it's going down. If this thing has no wick like that, then we know this is a super strong red candlestick to the downside. Super easy. But on the contrary, if we have a super small body and it didn't really go very much anywhere, then that's what we know as indecision in the market. And buyers and sellers are basically at even strength and trying to take the candle in both directions at the same time with the same level of strength. So that's why the body is super small. See if I can find an example for you guys. So here, it's a good one. So right here, we have three different examples right here of candles with super small bodies and longer wicks, meaning that price didn't really know where it wanted to go right here. Kind of just went sideways, kind of went up, kind of went down, but didn't really go much of anywhere. This is a sign of indecision. We call this a doji star, right? And on the flip side, when we have super strong candles with no wick, like this one for example, it's very clear who won that game of tug of war. Obviously the buyers won and the candle went up as a result. Same thing with the red candlestick. There wasn't much fight. This candle didn't even have a wick. There wasn't much fight on this candle. The sellers were clearly overpowering the buyers, shot the price way down, and as a result, we didn't even have a wick. So that's a good example. And on the other hand, when we have like, for example, this candlestick, whenever we have a super long wick or super long tail, this is a really good sign of rejection. As in, they wanted this candlestick to go up because this is the most extreme point that they got it to. But before that candle could close, the sellers shot it all the way back down here, and this is where it closed at. Let me see if I can find another one for a red candlestick. Okay. Like right here. So, same thing, but for a red candle. The sellers tried to shoot the price way down here, right? But instead of it actually being able to close all the way down here, the buyers bought it up and pushed the price all the way back up, all the way up here, which is a strong sign of rejection, which means that this candle got rejected all the way back up here just to continue this up move. So now you might be thinking, why do candles form? And the reason candles form is a mixture of different reasons. You got buying and selling pressure, but the main reason that you have it is the amount of volume. So on each candle, if you look right here at this number right here, you can see how many people bought and sold on that candlestick. And the more volume that the candle has typically means the bigger move that it's going to make. So right here, we see on this candle 1.98 million volume. But if we look right, see if I can find a good one. Right here on this little candlestick, it's only 369,000 volume. And look at this difference in size of this tiny candle versus that super fat one. Each candlestick is a representation of time. So I'm on the daily chart, meaning that each one of these little candlesticks is worth like a full day's worth of time. A full day's worth, a full 9:30 to 4 worth of time on each candle. But we have different time frames. So if you look up here in the top left, we have all of our different time frames. We have the 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, 4 hour, and daily. So each time frame, like for example, the 1 minute would be making up the 5 minute, and then the 5 minute, 3 5-minute candles make a 15-minute candle, and then 2 15 minutes make a 30-minute candle, and then 2 30 minutes make an hour, and so on and so forth. So tying this all together, whenever we look at all the different candles that we have on our chart, they make what we know as trends, right? So a trend in a different direction, so a trend up right here keeps going all the way up here. And then we also have downtrends like this, right? And the main things you're gonna want to know on the different types of trends is that whenever we have higher lows and lower lows, we're in a downtrend, right? So look, high, low, lower high, lower low, lower high, lower low. Those are the keys to a downtrend. But the contrary is true for an uptrend. It's high, higher low, higher high, higher low, higher high, and that's an uptrend. Makes it super easy, super simple. But all of this coming together, it helps us understand like trends and charts, and these candles and individual candles all tell a story about where the price wants to go and why it wants to go there, and how you can use that to actually take a trade. So, yeah. So, I hope this was helpful. And if you guys have any comments in the comments section about like maybe what I should do differently or what you guys want to hear about next, you can let me know in the comments, and I'd love to help you guys out. And hopefully, you can understand what each candle means and how we use them and how to read a candlestick chart. And yeah, hope you guys enjoyed. And I'll see you guys next time.